Starting right now, do something, anything on a consistent basis to move forward your dreams. My friends, for us, it's 10 to 15 minutes each and every day the market is open to chart your favorite stocks, ETFs. Listen along with us, take notes, fill out your daily market worksheet, weekly market worksheet, and trade worksheet. When you do your practice trades once a week, that weekly market worksheet every day, 4 days a week. You fill out the daily market worksheet. I'm going to put all three of the trainings on how to fill out those sheets at the end of today's video. By the way, those of you who subscribe for free to chartingwealth.com each and every day, the PDFs are there for your daily, weekly, and trade worksheets. You can print them out for free. Doesn't cost you anything except using your time wisely. Let's jump into these charts. Everything down but Bitcoin. Bitcoin up a little bit. Other things are down rather strongly as we go down the list. The least down is the S&P 500.28%. As we look at the charts, nice thing to see is we're reaching a higher high first day as these charts are moving. The candle, however, is getting smaller. Now, you want to note that and see what that means. How do you learn your lessons? Filling out that daily worksheet and learning from it, making note of the things that count. Look at our price percent oscillator. It's a little less than flat. Derivative oscillator still gaining upward momentum. Price is above that weekly trend line, just above the 2-day on the weekly chart. Let's go to the 2-day chart. It finished drawing today. We have, again, look at this. We saw where the market topped back on Monday the 8th, and things are sort of sliding sideways. Now we are reaching a higher high, but again, candle itself is small with a little wick on the bottom. Price percent oscillator is positive but heading down. Derivative oscillator positive, losing momentum. Look at what's happened on this half-day chart. It crossed over going down all the way back on the 9th of November. Down for a few days, then trudging up begrudgingly. It's falling off and slacking off every now and then. And then look at what happened in the afternoon. A nice up morning, reaching that higher high, and then crashing off in the afternoon. Lots of volatility. Whenever you see wicks on the top and bottom, you can tell lots of volatility. This red candle means tending down. Look at that price percent oscillator, hiking over, going down, and the derivative oscillator in the afternoon getting lots of downward momentum. Do pay attention. It is important to see that price did pierce the 2-day trend line. It's a good ways away from the weekly, but again, a lot of volatility. So pay attention to that. Now again, that was our least down for the day, 0.28%. We move on to the Nasdaq 100. It was down 1.16% versus 0.28%. Now, how do we see the week starting off? Again, higher high. The Heikin Ashi candlestick, which is something different. The Heikin Ashi candlestick is not your average high, open, low, close. It is calculated completely differently, but it helps us see things like average pace. That is what I'm told Heikin Ashi means in Japanese. That is what it's set up to show us. We look at the price percent oscillator, we can see that indeed it is losing momentum, not moving up at the same angle it had been, flattening. Derivative oscillator also heading up. Now let's make sure we draw, gaining a little bit of upward momentum. 2-day, what do we see there? Well, price is above the 2-day trend line. This is the latest 2-day candle, did finish drawing, and above the weekly. Price percent oscillator flattening. Derivative oscillator positive but losing momentum. Then we look at the intraday chart. Like we saw in the S&P, booming up in the morning and then just rolling over, hammering down in the afternoon. Still well above the 2-day and the weekly, getting close to crossing over. It's actually laminated right now. We'll see what happens on Tuesday as we move through this holiday week. So that's where we are with stocks. Now again, as we go through this list till we get to Bitcoin, things just gather downward momentum. Look at TLT, 20-year bonds. Again, we had a red spinning top last week. We have a red spinning top forming this week, just one day into the weekly candle. Price percent oscillator, just a little bit above, didn't cross over yet, but again, we had it pull away a little bit at the end of the week. Now it's heading back toward the red signal line. Derivative oscillator green gaining a little bit of momentum. And of course, we can see how much price has blown off since that weekly vertical crossover back on the 12th. We were not positive about that weekly vertical crossover. A lot of caution there, even considering jumping into a trade. It was laminated most of last week, if those of you recall, and then popped up on Friday. But again, nothing encouraged us much about where bonds were. So we'll keep an eye on things. We go to the 2-day. That is where you can see the price percent oscillator still flat. Derivative oscillator hardly positive, just barely. Green candle is trying to form, wick on the bottom, long wick on the top. Like we said, overall though, down for the day. This is the latest 2-day candle. Now we go to the half day. You can see where bonds down in the morning, further down in the afternoon. Not enough to cross over in the afternoon on that half day. Derivative oscillator still positive. Price percent oscillator still positive. Again, pushed through over the course of time, trying to push up on Friday. Did push up through the weekly and then rolling back over through it, still well below the 2-day. So we'll keep an eye on things as bonds move along. Really strange going into 2 weeks now. Let's go to gold. Gold, our biggest downer for the day, 2.24%. Now again, I told you guys 2 weeks after that weekly vertical crossover, I cashed out on gold in my trade on the week ending the 12th of November. It did continue, moving up, but again, not reaching a higher high last week. This week, starting off with a slam down. Price percent oscillator still positive, but man, losing a lot of momentum. Going up, now it's headed down. Derivative oscillator losing momentum too. Solid red down candle forming. Now just the first day of this latest weekly candle doesn't mean that's what it's going to do all week, but that's how it started. Look at the 2-day. It ended up with a strong down candle popping through the 2-day trend line, and we can see where the down wick even popped through the weekly. Price percent oscillator still positive, but spiking down. Derivative oscillator losing momentum after being pretty much flat for 6 days. So that's where we are on the 2-day. Half day, you can see where things really hammered down in the morning. A little further down in the afternoon, price percent oscillator spiking down. Derivative oscillator crossed over, or the price percent oscillator and derivative oscillator crossed over back in the afternoon on Tuesday, the 16th of November. Popped up in the morning and afternoon on Wednesday last week, and then just really started devolving Thursday, Friday, and then hammering down on Monday. So that's where gold is. Again, piercing that weekly trend line is a big negative start to the week. So we'll continue to watch and see where gold is. Now, let's look at Bitcoin. Up for the day. They're only green for the day, up 0.29%. Not up very much, but up for the week. Although our Heikin Ashi candlestick is showing us a red down candle, price percent oscillator still positive, heading down. Derivative oscillator positive, but going into the 3rd week of down movement. Look at this 2-day. Again, 6 days of strong down movement, just moving down. And again, when we say that, that's our 2-day candles are showing us that. Price percent oscillator heading down, derivative oscillator gaining downward momentum. And on the half day, we can see where things have, is slowly slowing down in that down movement, turning into solid green, slow down in the down movement, pushing through that 2-day or that half-day trend line rather, still well below the 2-day down trend line. Price percent oscillator still heading down and again losing that downward momentum. Derivative oscillator negative, losing downward momentum. So again, we're not in Bitcoin with that crossover going down. Those of you who are looking for a buy-in point on a Bitcoin practice trade, Let this down movement play itself out, and when that 2-day crosses back over going up, you see something like we saw back on 10-7, then that is your jumping in point. But we'll wait and see if and when that occurs, because you know what could happen? The weekly could rotate over going down. That means long, strong down movements in Bitcoin, which would hold off any buying point on a practice trade even longer. So we'll wait and see. That's where we are, folks. Thank you so much for being with us. We'll continue to be tracking these markets. Appreciate our Patreon supporters. Appreciate you. We do have an autographed copy of our book, Charting Your Way to Wealth, available. Also, look for a price break. It saves you $25 if you want to subscribe to the paid version of freestockcharts.com. That is TC2000. You see us using that platform every day. And what do we have for you if you subscribe? We've got a link there so you can have the same chart that we use. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.